What I'm about to show you explains everything on the demand side in such a simple way. I can't believe I didn't see it before. I feel like I've been trying to make the chart that I'm about to show you for years, and it finally just clicked this morning. You're going to see past so many headlines. It's just noise. I'm so excited about this. So you know there's supply. Supply is a disaster in most places. We're not talking about supply today. That's a different story for a different day. Today, we are going to talk about demand again because let me just show you this headline. It says home sales surged in October just before mortgage rates jumped. I don't know why they added that. I guess they're saying, oh, mortgage rates jumped, so demand's going to drop again. Not true, but we're going to get there. Okay, so sales were 2.9% higher than October of last year, marking the first annual increase in more than 3 years. Demand just notched up for the first time in 3 years. We got more sales than we did the year before. This is leading the NAR to say is the worst of the downturn over in home sales. And check this chart out, by the way. This is a great chart, 2023 through 2024. Total existing home sales percent change year over year. It's been negative for years. 4 years. So what gives? Well, let's take a look at this chart. So this is your 30-year mortgage rate chart, which by the way, I'm going to come back to this. I'm going to start with Fred, and then I'm going to come back to this one because this is going to explain. It's really, really cool. Okay, this is your 30-year fixed rate mortgage. You can see let's go just 5 years. We can see we absolutely got pummeled in 2022, and then it's just been kind of up and down, up and down, up and down ever since. What I'm going to do though, this is where it gets so interesting, guys. I think I know why people didn't make the connection. And we're just going to do change from a year ago. When we do percent change from a year ago, a couple things happen. One is you can see that from September of 2021 all the way to November of 2022, the year-over-year change was scorching. And we saw one of the fastest, most responsive drops in demand that we've ever recorded in the history of home sales. And since then, we've started seeing it come down, get a little bit closer, a little bit normal. You can see it dips. And then what happened about 3 months ago? Starting in the end of July, early August, mortgage rates year over year went negative. In other words, it was the first time in 3 years that mortgage rates were lower than the year before. Lower than the year before. What did that headline say? For the first time in 3 years, we got our first year-over-year increase. Now, you say, Ethan, wait a minute. This was in August, and you're showing me a chart for October. That's what this chart is for. It's for October. What gives? Well, this is where it gets fascinating. This is a chart of year-over-year change in demand for Nashville. Okay, this is specifically Davidson County. It's specifically contract volume. That's an interest rate sensitive county, and it really doesn't matter. I believe that you would see this in any segment of the market that's interest rate sensitive. We can see that over the last, and this is about an 18-month chart here, but we can see the year-over-year change in mortgage rates, and we can see it drop. What's going to blow your mind is that I pushed this chart up 4 weeks. Okay, I pushed this chart up 4 weeks. That means that you have to look at the year-over-year change and then push it up 4 weeks. It's a leading indicator. That is astronomically mind-blowing. Okay, and so now we go back to the 30-year fixed rate and we see that it went negative in August, but demand didn't pick up until when? Demand didn't go positive until September. Now, in September, which you go back and look at my last video, you can see we talked about this. But on September 11th, demand responded. It took 4 weeks for demand to respond to a year-over-year negative. Now, once it responded, mortgage rates started going up. We can see it here on the Mortgage News Daily. Here we're at September 11th. What happened? As soon as demand responded, mortgage rates stopped dropping. As soon as demand responded, mortgage rates stopped dropping. And it started moving back up. And then boom, we got hit with two massive, I think one was a jobs report, one was CPI. I can't remember. It doesn't matter. Went back right back up to 7. Now, when it went up to 7, everybody thought, oh, well, that was over. I mean, even Amy's post, she said, don't get too excited because rates have been going up ever since. So why am I saying that demand is going to continue staying positive? Well, it's really simple. when we look at this chart, the demand is inversely correlated, strongly inversely correlated with the change in interest rates from a year ago, but pushed up 4 weeks. So we can see that it took 4 weeks for demand to respond. As soon as demand responded, interest rates went up. But even though they were going up at a time where they were already sky high from the year before. So actually, the year-over-year change still went negative. Even though mortgage rates were going up, they went up less than they did last year. Last year, remember, we got 8% mortgage rates. It doesn't matter what the rate is. It matters whether or not that rate was higher than the year before. That is incredibly important. That means that a 7% mortgage rate next year will not do what a 7% mortgage rate did last year. It has to be higher than that to really suppress demand. If we have a 7% mortgage rate for the first half of 2025, we'll probably have positive demand. If we have a 7% mortgage rate on the back half of 2025, we'll probably have negative demand. And so what that means, this chart that the NAR is showing right here, let me find it. This chart right here that had its first month of year over year, okay? Guess what? There's going to be 2 more, okay? You're going to have November and you're going to have December. They're going to be positive. And let me tell you, getting a full quarter of positive year-over-year demand from the previous year is going to be celebrated like, it's just going to be celebrated like it's over, all the doomers were stupid, and all the bulls were right, and blah, blah, blah. And look, I'm not here to tell you where prices are going to go. I think they could drop next year. I also know that they could go up next year. That's also reasonable. This is not what this video is about. What this video is about is that we're about to get 3 full months of positive demand, and it's already baked in, and it has everything to do with the year-over-year change in rates, and nothing else really matters. We're going to go into January, and depending on where this 30-year fixed is, if it's above this line, we'll start seeing demand sink. If it's below the line, we'll start seeing it continue to be positive year over year. At least that's my conclusion. Please tell me in the comments what you think. I would love to hear your opinion and whether or not you think 7% mortgage rates will keep it suppressed. This is the best time to buy the year, by the way. So I'm not telling you to wait because demand's higher. This is right now the absolute best time. There are plenty of houses out there that people are asking for offers. They can't get any. There's been price cuts. If we look at the real-time price tracker that I have, by the way, I'm finishing this. We're really excited about it, but we're starting to see price cuts tick back up, which means that there's going to be more price pressure in the next 4 to 8 weeks. You can see contract price, which scorched, where we see November prices could be at a record ever in median sales price in Nashville. But coming out of that, we're going to see a little bit softer December, and especially with concessions, it's going to be probably even lower. We see price cuts tick up. So it's going to be soft on prices. We're starting to see that trend. Now, year over year, though, we're at 465 in February of last year. We're not going to be anywhere near that. So year over year, we're going to be positive, very likely in January, February, but certainly in November, positive. December is going to be a little bit soft, but still very likely we will be positive year over year. But that doesn't mean there's a lot of properties out there that people are begging for offers. There's a lot of people that can't afford the areas that they live in, and we're starting to see softness. And so there's some really weird things happening in the market. I don't want you to think that I'm dismissing some weird things happening in the market, but just know, even with all this weird stuff happening in the market, even with supply being up, by the way, in Davidson County, I mean, it's up massively over 2017, and demand is still 30% lower. There are some really weird things happening in our market. But if you're looking for $1 million house, there's never been more demand. You're looking for a $2 million house, there's never been more demand. Supply is catching up to it. Migration is staying strong. So there's a lot of positives about our housing market. And with that, I hope you're having a great day, and I will see you next Saturday.